committee and the International Accounting Standard Board recently met in the month of August, and they have suggested a lot of changes in the current reporting structures, especially keeping in mind the importance of the changes which has taken place in the geopolitical environment. Even they have got a lot of things, especially to record the cross-border transactions happening because of Ukraine and Russia conflict also. So today, you cannot report anything in isolation with the geopolitical changes or the environmental changes or the social factors. Without that, you cannot report anything. That means the focus is more not only on financial aspects, but also on non-financial aspects. That's the very key point which we need to remember. And of course, the technology changes which are taking place, the revolution of AI and robotics and all those things, that digital transformation, what we call it as, even that also cannot be ignored when we are talking about the structure of the financial reporting, what needs to go for change in the coming days. So keeping those things in mind, today I'll be making some small presentation on that. And not only that, the latest formats changes which the MCA has brought in 2021, which is effective from 1st of April 2021-22, that is the financial period. Even that I'll be discussing some of the changes which MCA has recommended, Ministry of Corporate Affairs has recommended in its 2021 notification. Even that also, those points also I will be sharing with you. And of course, some of the amendments which to some of the standards which the MCA has brought in recently, even that also I will be discussing in today's presentation. So just I'll share my screen 1 second. Hope the screen is visible, I think so.
Yes, sir, it is visible.
Okay, fine. So one of the, as I was mentioning, one of the key future changes which anyone can expect in IFRS is integrated reporting. That's what the term they are trying to coin in the coming days. So integrated is a very broad word. So it doesn't include only financial aspect. It even gives importance to more of non-financial aspects also when it tries to cover in the reporting structure. So here you can see that various angles through which the IFRS will be looked into in the coming days. So it's not only the major financial statements, even there are a lot of supplements which gets into the financial statements, like management commentaries, governance reportings, environmental and social impact, corporate communications. See, these are the other areas which are also getting lined up when you go for the hardcore reporting of your financial aspects. So when you are telling, you are reporting the finance part of your corporate reporting, so it covers even the impact of the corporates on different angles, especially looking from the socio-benefit angles or from the environmental angles or from governance module also. So that is the major changes. Even the MCA has recommended to bring some changes, especially when the model of the directors and the key managerial persons reportings are concerned, especially in the form of duties or in the form of any involvement in any crime or they're colluding with any other businesses which can have impact on the total business reportings also. So even that has also become one of the major aspects of the financial reporting. So one thing what I would like to say here is, going forward, it will be more of an integrated reporting depending upon how big or how small your companies are. But you need to disclose everything. So if nothing is there, you need to give a disclaimer that these particular things are not applicable to you. And you need to set measures whenever these type of things happens in your business, right? You need to come out with the reporting in a clearest form. So the focus is more moving towards even the non-financial aspects also. So that's what I wanted to say here. So going forward, don't think that financial reporting will be only looking at some numbers. Okay. even the impact of non-numbers also will be very important in the disclosure forms. So already the director's report in the current financial year and all, we are already disclosing some of the key things, what the key steps, what the company has taken in order to protect the environment or in order to save the climate related things, especially in the form of bringing down the energy levels. So how many energy audits have been conducted, how many water audits have been conducted in that particular organization. So what are the net savings, what they have done through that, and what are the non-financial benefits what the company has got, especially in terms of utilization of capacity or reduction in man hours or saving of electricity from how many units to how many units. So these are the things which gets disclosed now. So it's not only viability in terms of profits or how you care for your investors in terms of declaring dividends or giving the returns. It is also what is my responsibility as a common man, especially in terms of protecting the environment, climate, or the ecosystem under which I'm working. Even that also becomes a very important aspect. So key trends here is non-financial aspects. So that also forms part of disclosure in the coming days. So even in the August meeting of the IFRS body, they have decided to come out with a framework, new framework, wherein they will be giving much importance to the various factors, especially in the developing countries, where they are not yielding towards more, what do you call, they are not taking more serious steps, especially in terms of the controlling of environmental hazards, all those things. So company is getting utilized. So by pushing towards a lot of energy degradations, especially in the mineral sectors and in the other areas where the resources are getting utilized, right? So the economic benefit of that particular resource utilization is also not getting tracked in the developing countries. So underdeveloped countries is also one of the things where the exploitation is taking place from the developed countries on such things. So IFRS body has seriously thought about this. So today somewhere we see that we are coming out from the era of measuring any transaction and reporting any transaction only by financial aspect. We are also considering some of the very important value additional things which needs to be done in order to establish that the company is not only working for making profits and sharing returns with their investors, but also taking the social responsibility at a major thing, as a major thing, and contributing towards the growth and development of that particular nation in those terms also. So that aspect has now reached into, and the International Accounting Standard Board also in their last meeting in Geneva, they talked about these points. So they highlighted that these need, they have listed out a lot of the future measures which needs to be considered in order to ensure that the reporting will also include non-financial aspects to the core. So that is one thing which is changing. That is, we can expect a lot of changes happening in the coming days, especially in terms of linking various standards which are already there, which is talking about the measurement concepts, especially in terms of social benefit and all those things. So integrated reporting is one area which is getting more and more recognition in the coming days. So it is now the very important that we also think about that when we are going through the corporate profile, when we want to either invest in that company or when we want to look to have long-term relationship with the company, even the banks or any other stakeholders who want to be part of that business, right? Even they will also be looking at these points in a very greater concern way. So that is one thing. Second thing is increase focused on business responsibility. Is the slide changing? Can you see the slide change? Hello?
You're audible, sir.
No. Is the slide changing?
No, sir, no.
Slide has not changed.
No, sir, it is not changing.
I think in the PowerPoint view, it's not going. Now, what about now?
Yes, sir. It is changing, sir.
Okay, fine. So increased focus on business responsibility reporting and ESG performance. What is this ESG performance? Is environmental, social, and governance performance. That's what it means. So environmental and social governance performance is all about. I'll just share one of the important slides which has come out in the recent meeting, which was held on the emerging trends, especially when we call the international IFRS board when it got when the committee of IFRS met right in the recent months. They highlighted these pillars, especially the three pillars of governance module, economic, environmental module, and social pillars. They focus more on this, and they are giving more importance to this. So what is there in this environmental pillar? We can see that priority has been given to climate change, natural resources, pollution and waste, and environmental opportunity. So environment opportunity is a very interesting word. So we have even something called as environment entrepreneurship. Okay, there is something called as environmental entrepreneurship, and green audit is also there. So there are a lot of new things which are happening in this reporting front, especially in these areas. You can see there in climate change, we are focusing more on carbon emissions, product carbon footprints, how we can reduce the carbon footprints, and how we can make money out of it by selling the credits or by exchanging credit in the customs. So custom is also come up with new schemes wherein they give a lot of benefit for exchanging the credits in the international market for the imports, what they do, and all those things. So then financial environmental impact is also there. That's a very important aspect actually. And the last one is on the climate change vulnerability. So these are the part of the recent meeting in the February where the developed countries met, and even the Indian Prime Minister made an address in that particular summit, which focused more on reducing the carbon footprints and contributing towards the energy neutrality, especially in terms of bringing down the emission level to the Kyoto Protocol level, whatever was suggested at that point of time. So now countries have seen, we are also expecting the rain and all those things, right? It's not a regular rain what we have expected in Bangalore and all those things. We have already experienced this, what is happening with the climate. So now even the companies are also becoming more more used to it, because it is found from one of the survey that 65% of the emissions are coming from the corporates, companies. So it may be different companies, but they are the people who are utilizing the resources, and without much of the environmental standards being followed or practiced, they are polluting the environment. So that's why the more focus is on corporates. So that is on the climate side, and the natural resource side about water stress and biodiversity and land use and raw material sourcing. So I think most of the points on raw material sourcing depends on the environmental related issue, that is natural resources. So most of the countries, in order to dominate themselves in the global market, they are using the resources much more than what is actually required. So the resources are getting utilized in most of the cases beyond the expected level, and that has created the imbalance with the ecological environment. So that is one of the key issue which was discussed in the IFRS committee in the August month. So they focus that some of these companies which depends on natural resources as for the raw material, right? So they need to work towards that, and they need to see what are, every year they need to start reporting. So how best they have used the resources, and what is that they have contributed back to the society in terms of either going and planting back trees, or regenerating the water resources, or how they are helping back to the society in terms of either through CSR activities or through their own initiatives in their nearby areas, and how they have develop the social forestry and all those things. So these are the things which now needs to be reported. So financial reporting even covers non-financial aspect also. That's what I wanted to highlight upon when I talked about these points. Then pollution and waste is again the second important thing which needs to be given more priority now. So their toxic emission on waste, we have seen what is happening in Bellandur Lake in Bangalore. So how much corporates have contributed towards that foam formation, which has become a big news in BBC and all those things. Recently also we have come across. So I think this is one area where the corporates needs to look into, and it's not just presenting a good balance sheet or the P&L account for the clients. It is also at the same time how best are we managing our surroundings. That is also a very important point in your reportings. So that also adds value to the corporate. That also brings very goodwill, and also the brand image of the company goes up because of those things. So when we are doing the valuation, business valuation, right? So these factors are also given weightages. So what are the measures taken by the company in order to protect the environment, or in order to help the society at large? So what all they have done, even that point also becomes very important score for valuing a business. So that needs to be forming part of your corporate reporting also in the coming days. Packaging material and waste and electronic waste, and you know what they are doing with electronic waste. Most of the electronic batteries, all these things, they are dumping into the sea, and this needs to be recycled. That's what the companies are now trying to talk about. So even the for example, most of the recently concluded Olympics, right? Most of the medals, whatever was made, right, that was made up of used lead and tin, which was there in the batteries of the mobile phone. So Japan used it in more effective way in doing that. So a lot of corporates got opportunity to work and transform those things into a usable form, instead of dumping those things in a forest or in a water body and spoiling the water body and all those things. So even that needs to be taken care as a priority sector when it comes to the reporting form of the corporates. Then environmental opportunities. So opportunities in clean tech, opportunities in green building, and opportunities in renewable energy. So these are the things where the companies needs to focus more when they talk about what are the contribution towards the environmental things, and what are the opportunities which they are getting. So more and more companies are now leaning towards solar power energy. So I have seen a lot of my clients shifting their business from the earlier power what they used to get from the local BESCOM and all those things. Now they have started in, putting more and more solar panels on their factory shed itself, and they're converting that energy for usages. So here we know that we are not burning the coal, or we are not burning the nuclears, or we are not depending more on hydroelectricity. Here we are using the renewable energy, which is the natural source from the sun. Similarly, how the captive consumptions can be made with the existing output at each stage, even that is also being thought of in many companies, especially when we talk about manufacturing of alcohol and the other byproducts which are coming out of various raw material, right? How it can be effectively used in order to generate electricity internally, that is also thought of. So even that needs to be now disclosed in your financial reporting. So what is the captive consumption you have made, and how effectively that captive consumption saved in form of energy cost, or in terms of saving the profits of the company, or how it is helping you in protecting the environment at a larger interest. Even that also becomes your environmental opportunity, which needs to be disclosed. So these things were already advocated in the cost audit system, since many company doesn't come under the cost audit because of the applicability restrictions which are there as per the Companies Act. But now, irrespective of whether you do that or not, as per whichever company should file the returns with the MCA, right? They need to disclose all these things. This has become a mandatory part now going forward. Then coming back to the social pillar, of course, the human capital. This for quite long already the companies have started doing it. They have started focusing more on labor management, health and safety, human capital development, and supply chain labor standards. So now they have given importance to all these factors, and even I think you people know about the labor codes which has been come up by subsuming 27 different labor acts, and they are making it simple. They are caring for the people and how the company is building their human capital, caring for their human resources, especially in the form of talent and the skills which are there, which is getting utilized in the company. So even that human capital is one thing which is seen as a very important topic, which has got a lot of the importance in the global context when you are trying to source the work from there. So how good are you in balance sheet with human capital? That also has become a very important thing. Many companies in India has already started reporting the human capital even in their balance sheets. So they have given the values, they have valued the human capital, and they have started disclosing that also in their balance sheet. So it's a very good move actually, and we can see some of the still changes which are coming out post-COVID era, especially when there is a lot of challenges, especially in terms of the work environment under which the humans are working in that particular organization. So the training, upgradations, and all those things, learn and unlearn things, skill development, and all those things are placing importance. Even that needs to be highlighted in the reportings now. Then product liability. This is mainly about product safety and quality, chemical safeties, financial product safety, privacy and data security. Very important thing. Even that also needs to be disclosed now. So what are the measures you have taken? These were the part of reporting in the US GAAP earlier. US GAAP used to report all these things, especially in terms of data security and data management and the confidentiality of informations, whatever is stored in the systems. That used to be forming part of the disclosure, because as an investor, if I'm putting the investment in your company, then how safe the company is, especially tomorrow, because there are stringent laws in US and all those things, wherein any theft happens, then it will be a very serious consequence on the directors of the company on why they were so negligent in and did not take any measures to control that or to bring down that theft and all those things. So it's a serious offense there. But in India, we are now going for more and more practices to restrict that. Even we are also now becoming very, very safe or very cautious about data security and data safety. So we are ensuring that the client informations or the company's information, crucial informations, doesn't get stolen through hacking or by any other means, unless and until we have a strong environment created in our ecosystem. So keeping that in mind, even that has also become a part of reporting standards now. So what are the measures you have taken? So MC has come up with even the cryptocurrency reporting also. So that's a very important thing. We'll come back to that in short while from now. Then stakeholders opposition, especially controversial sourcing. If anything is happening without the knowledge of the stakeholders or without bringing to the notice of the stakeholder, if there is some arrangements which has taken place between the company and the others without bringing to the notice of the key managerial persons or the people who are at the discretionary power of giving the decisions, then even that also needs to be disclosed now. So the company has not gone into any violative process, or it's not going for any controversial sourcing and all those things. Even that also forms part of your disclosure norms in today's financial reporting. And social opportunity, a very important word, which talks about access to communication, access to finance, access to healthcare, and opportunities in nutrition and health. See, these are the new things which we never thought of, that these will be forming part of your reporting. So when we were studying in college and all those things, we thought financial reporting is only about analysis of cash flow statement, analysis of fund flow statement, analysis of balance sheet, and profit and loss account. So everything revolved around the numbers part, number crunch, whatever was there, right? So we used to revolve around our financial reporting only on the numbers. So based on ratios and all those things, we used to analyze the financial reportings, and that was the financial reporting, even what the corporates expected, MCA expected. But today, apart from that, even the other aspects like social opportunity, especially in terms of the health and safety standards and nutritional health standards, and what are the things you have taken up to give healthcare facilities and arrange access to finance for your employees, and all those things even will be forming part of your corporate reporting. So the last pillar is about a governance pillar, especially on the corporate governance and the corporate behaviors. So it's a very important thing, because the relationship management is the key thing which is driving many of the businesses in the world today. So board diversity is there, and executive pay is there, ownership, accounting, and all those things. And in terms of corporate behavior, it is business ethics, anti-competitive practices, corruption and instability, financial system instability, and tax transparencies. So if you just look into the internal audit system, so there is a lot of changes which has been brought in this internal audit system also. So now the internal audit is called as internal financial controls, IFC they call it as. So they are not only bothered about the numbers, which they used to do it in internal audit. Now it is more focused from the fraud angle also. They are looking into the materialistic angle of where there are the chances of fraud, how the interpretation of data can be stolen by someone else, or how a misrepresentation can happen in the business, especially in the contract management and all those things, or a collusion of top level management with vendors or something like that. Even that angle will also be verified now in your internal audit report. So internal audit is no more just taking some purchase order and seeing whether 5 units of computer was booked, it was received, 5 units, what is the rate and what is the amount. It is not only ticking that particular financial aspects, it is to do with more than that. So we are going ahead forward and talking from the perspective of where the chances of frauds can happen. So is there any scope or areas under which there is a chances that the fraud can be detected at that stage or not? So that is the level of changes which has been brought in the internal audit reporting today. So similarly, when we talk about this financial corporate reporting, there the focus will be on even the board responsibilities and what are the board diversity, or how the functioning of the board happens. Even that is also being given importance. So this even the MCA has brought into note about the 2021. So if the board has any relationship with any other stuck off companies, for example, that a particular director is also a director of a company which the name of that particular company has been stricken off from the MCA portal because of non-fulfillment of the statutory obligation. Even now, the board director who is in a X company needs to now disclose whether such stuck off is there in some other company where this person is a director. Similarly, if any insolvency proceedings are pending against a company where X person is a director, even there also you need to disclose that such and such a thing has happened where he is also a director in that company. So they are fixing the responsibility in the form of where things can go wrong. So even that also needs to be highlighted now in the reporting. So that these things and all comes in the notes part of the account. So the role of auditors has been now not only just looking at the figures, okay, usual figures, whatever is there, but you need to look from you need to investigate even these areas also, whether this guy is involved in other, that means the role of auditor is becoming more of analyzing the responsibility things, especially when it comes to the question of how the company runs its business and all those things. So those are the thing, ownership related thing, accounting related thing, and all those things. So these are all huge concept. Okay, if we start explaining one part, right, it may take a lot of time. So I'll not get into too much of it. These three pillars are very important in the corporate reporting structure changes, which will be happening in the coming days. Most of the things have already been part of it. The companies are doing it. Only thing is they have not come with a standard reporting structure where they need to disclose it in the form of a notes to the financial reports. But some big companies are doing it already. Some of the things they are already bringing these changes into them. So we can expect some more changes to happen in the coming days. So these are the emerging areas where we can see a lot of changes taking place in the coming days. So that's what we are focusing more on. So why you think this environmental, social and governance module needs to be given more importance? Because definitely it adds value to your business. It's a value-based approach which creates value to your business. So we need to give more importance to this. So it drives the growth. That's a very important thing. Every company wants to grow. They want to lead from what they are doing it, and they need to move to the next level. That's what the growth means here. So growth is not in terms of volume of sales or making huge profits. Growth is in terms of sustainability and how good are you in terms of expanding yourself, or how good are you in building your brand image and all those things. That matters very much today. So how can a social environment trend help us differentiate our products and increase our market share? So that's we are looking at. So how we can best be moving towards the next level of your operation growth. So that will be the point what this ECG will be focusing more on. Then reduce cost. So most of you are aware of that today. The competitive business is all about how competitive enough you can bring down the cost. So if you want to survive in the business because of monopolistic competition which prevails, so there are large number of buyers, there are large number of sellers, there are free entry and exit points. So how do you enter the market and how do you capture and sit in that market? That's a very important thing now. So only factor which can push you to be competitive in the market is how good are you in managing the cost or bringing down the cost. So sometimes reduction of cost needs to be enforced on the particular company, so that they are forced to bring down the cost so that they remain competitive in the business. So that's the key challenges which remains there. So if you can add value, definitely your cost can be reduced. So how do you add value? If you can be close to the society, if you can work with the environmental factors and consider all those things, definitely it creates a lot of brand image and brand value for you, and that's how your cost can be brought down and your sustainability can be ensured in the coming years. So that's what they are talking about. And enhance reputation, that's what I've told you. Goodwill, brand image and all those things are definitely part of this particular ESG model. Then manage risk. This is one of the key areas. How do you build a resilience to business disruptions caused by climate change and resource scarcity? So how do you do that? That can be done only if you can work with the environment, be in the environment and work with the environment. So that's how environment also work towards you. So if you can understand and if you can be close to the environment, then definitely environment also supports you in your growth and development. So that resilience, whatever is there, right, that needs to be worked out, and that can bring down your risk to a maximum extent. Then minimize impact. How do we fulfill our obligation to operate reasonably, both from an environmental and social perspective, and be a focus for good? That's the ultimate thing. Profit may come, profit may go, okay, but sustainability is not measured through only profits. Sustainability is measured through how you have bought your relationship with the factors which are associated with you. So only that will carry you forward for a number of years. That's what the Tata culture is all about. So Tata is one company which follows that culture over a period of time. And today you can see how the Tata Motors or any Tata groups for that matter, how they are able to maintain that relationship in the business for so many years of time. So even though they might have lost big projects or they might have lost a lot of market share, but sustainability, if you talk about Tata Group, still they have the same sustainability level. So how did they do it? They did it because they don't consider profit as the key objective of any business. How they build relationship, how they take care of their employees, and how they create benefit to the employee society in terms of giving up their share of whatever the returns they have earned. That's made them to stay in that position today. So that those things, if you are interested, you can open up any Tata Group's balance sheet and the director's report. So you can see what are the various areas they are working with. In their, they have given it in the reporting form. So they have disclosed what are the things they have done. Tata's, what are the environmental measures, what are the social measures, or what are the charitable things they are doing it to the society. So if you can go back and see that, you can just visualize in their director's report the entire gist of whatever the activities they have done over 21-22. They have shared it in their analysis of their director reports. So those are the real strength actually. So which can be carrying a very good image and very good things in the market. So those points will be now disclosed, made it as a mandatory disclosure in your corporate reporting also. So we need to wait and see for the guidelines coming out. Slowly there are a lot of guidelines which are coming out and which are getting implemented, and we can see some more changes coming in the near future. The next thing is on-demand reporting using automation solution. So today I just want to tell you something about robotic accounting, which IBM is already started implementing those processes. So today the automation is moved into such a level in accounting that the areas of the solutions provided in various digital way, right, that is getting implemented in a very faster way in order to bring the information to a very faster stage. So this reporting also due to automation has become very fast and very accurate also, provided if the data is keyed in properly. So even there are some areas where the data is getting automatically picked from various sources and getting reported on its own. So that has made the reporting structure more vulnerable, and that has made the reporting structure more fast, and also it has given more scope for bringing a lot of changes in the reporting formats also. So many companies are doing it. If you can go back to the report submitted by companies like TCS, Tata Consultancy Services, you can see a lot of disclosure norms which has been disclosed on their voluntary basis. They have not been prescribed under any of the regulatory norms, but instead of that also, they have gone and they have started reporting on their own. They have started furnishing a lot of inputs to their stakeholders. So they believe that more and more information and transparent they are in their approach, more and more they can win over the hearts of the customers. So that is what the businesses are up to now. Building a relationship, having a long-term relationship as a going concern, that's the matter which needs to be giving more precise value to that business for sustainability over a long period of time. So on-demand reporting using automation solutions, many companies are gone for this robotic accounting, where the RPA, we call it as robotic process accounting. Even the IBM has started implementing these things across the world now. So they are going for the entire process of accounting being stabilized across the globe. So this is one important thing which is required, because once they start doing this, they will be having the similar reporting structure across the globe. So wherever you want to compare the financial reports of IBM, so it will be giving the same level of capturing of the data, interpretation of the data, analysis of the data, and finally output will be something which is uniform across the global reporting. So they are trying to do this. It's a big challenge again, because IBM has its existence almost in 35 different countries. So all of them doesn't follow the same IFRS, or they don't follow the same local reporting standards may be different. But through this process, what they are trying to ensure is at least we can bring at a corporate level the same level of reporting from all the subsidiaries and the branches which are existing across the globe. So this can be done through automation. That's why they are pressurizing more on this automation tool, and how on-demand reporting can be done through this automation tool, wherein you can have a uniform system of reporting across the globe for that particular company. So yesterday when we were discussing, we talked about uniformity, right? So uniformity is a very important thing. So how can we bring uniformity? If you cannot bring uniformity in your business itself, how can you bring with the entire company structure itself? How can different companies, how can you bring a uniformity through standards then? So definitely, right? So that's a challenge which is there. So, but that needs to be addressed. So this is one area where they are trying to bring those changes also. So then we have mitigate financial reporting skills with cross-functional team support. So now any big organization you go, right? So the traditional system of people not getting involved with the other departments has vanished. So now cross-functional team support is very much required in order to give the reporting, because all these years only the accounts department and those people who were associated with accounts department, they were given the task of preparing the financial reports, and they used to do the corporate reporting and all those things. Since many standards come up wherein the focus will be not only on the financial aspects, even the non-financial aspects are also concerned, involving the technical department, even in the involving the HR department and other departments which are not directly concerned with accounting and finance or taxation, right? Even that has become a major aspect now. So cross-functional team support will be involved, and that their involvement will make a lot of financial risk to be mitigated. So we know that the major issues in a lot of companies are relating to that many of the internal supporting will not be there, and no one will take the responsibility for anything wrong which happens, especially in the financial matters, because they say that they were not kept informed, they were not part of the discussions, they are not part of the committees, or they are not part of the approval things and all those things. But today the system has changed. So cross functional team support is very much required, because the angles through which the corporate reporting happens is not from only accounts or taxation department. Even the non-financial areas also should be included. So this will help in mitigating any financial risk which is there because of involving the other people also in the team. So I think in a holistic approach, this needs to work in a better way. And a lot of things are going around this. And I have visited a few companies recently where they have formed a team of professionals pulling from various departments, and they meet every fortnightly once, and they'll be discussing about where they stand, especially in terms of fulfilling the objectives and the visions of the company. So they will be discussing on that. So this is a wonderful idea, because we need to keep them informed about what is happening with sales, what is happening with the investment part, and what is happening with the new markets which we are sourcing and all those things. It should not become that the role should be only looked after by the particular team, like marketing team should look after only marketing, production should focus only on production, and they should not learn or know about other departments, nothing like that. So today cross functional team support is very much required. So in order to mitigate any type of risk, it may be financial or non-financial, any risk, even that needs to be addressed to at a very faster rate. So the corporate reporting now is also coming up with a lot of reporting dashboards, wherein they are talking about what are the cross functional team support you have initiated in the organization, so that you are involving the other people also in the decision making process. So that has become a very important and a significant thing which has been raised. So that is one thing. And the Financial Reporting Council has given some of the observations in the 20th October 2020. The annual review of the corporate reporting, which reveals the top 10 areas where improvement to reporting quality are needed. So users of accounts have a clear understanding of company performance and position. So what are the areas, 10 important areas they have focused on? So they have told all the companies should focus on these 10 areas every time, so that they have a very a good reporting coming out of when they are able to disclose that. So judgments and estimates are one thing where we can go wrong. So that needs to be addressed, the top priority area. Then impairment of assets due to change in technology or due to disruptions caused by the changes in technology. We are seeing that most of the assets are not getting used to the fullest extent. So what are the impairment policy you have followed in that, and how you are showing the impairment assets in the books of account? Whether Ind AS is considered or capturing those things relating to impairment of assets, that's a very important thing which needs to be also brought out. Sorry. Revenue on contract with customers. This is very important thing, because you might have seen how the contract negotiations are now becoming very important. So since we have a lot of arrangements which are taking place between different countries, so there it is very important that the contractual obligations with customers becomes very important for us. So how do you recognize that revenue, okay, from contracts with customers? So that's a very key thing which the disclosure should report on those things also. So then financial instrument, of course, there is a very lot of things which are coming up with the new instruments of finance which has been rolled out either by banking companies or the markets or the capital markets or any other financial instruments bought out by any segments of the financial institutions. So they are adding new products into the market. So whether our financial instrument standards are up to the mark or upgraded with those things, or have they considered those things in their standards as to how to measure and how to report that? That is again a very key area. So recently that I talked about something on the derivative segments. Okay, there are new instruments which have been added in derivative segments. So have they given consideration for those things also when you are talking about the IFRS or Ind AS reporting standards? So have we considered those financial instruments recognition, and how do we do it? Because we should not contradict with the reporting thing, because there is always a complaint in the global arena that India doesn't follow some of the norms as expected under the global regulatory norms. They don't follow that. So such type of things needs to be understood even when we are talking from the angle of the financial reporting things. And the people who are working in that should be also aware of those facts, how to do it and all. Alternate performance management, strategic reports, statement of cash flows, provisions and contingencies, fair value measurement, and business combination. So these are the 10 major areas which they have focused on. And they have told that a lot of work needs to go in this, because these are the priority areas which are going for a lot of changes. And these are the dynamic areas which are keep on changing from one and now because of various business changes happening in the global context. So even we also need to go for changing all those things. So companies, this is what the Financial Reporting Council had given it in their last report. So I'll just share one more slide relating to MCA. One second, I'll just share it. Yeah, this is the MCA notification what I was talking about, which has come out in 24th March 2021. Especially on the Schedule 3 of the Companies Act, which deals with the balance sheet and profit and loss account items. So there are a lot of.
Yes, sir, the screen is not there.
It's not coming up.
No, sir.
You're not able to see the screen.
Not the balance sheet. What you're saying.
So we can see the folders, but not the balance sheet. What you're telling.
Okay, 1 second. Now you are able to see?
Yes, sir.
Yeah.
Presentation PPT is open, sir.
Yeah, PPT is open. So this MCA notification which came up on 24th March 2021, making it mandatory for some of the disclosures which needs to be presented in the 21-22. So the year 21-22 financial reporting, what you are supposed to do, right? It should be done as per the notification issued. So there are a lot of notes and there are a lot of disclosure which needs to be done, and that needs to be presented in the way as MCA has directed. So what are those changes, or what are those extra disclosure what you are supposed to show in the notes on accounts is I'll be just showing some of them which are very important. So this is one thing. In the share capital, they have told that you need to give now the promoter's name, number of share and percent of total shares, and percent changes during the year. So this was something which was not there earlier. We used to only give the shareholding pattern when you used to upload the annual returns with MCA. So we used to upload AOC 4 and followed by MGT 7 and the shareholding pattern, which used to be forming part of the MCA MGT 7 reporting. So that needs to be done earlier, but now they have asked, apart from all these things, you need to give one more inputs as a disclosure in the notes, wherein you need to talk about the number of promoters who are there, okay, who are holding the shares at the end of the year, and what is the number of shares they have held, and what is the percent of their shares to the total number of shares the company is holding, and if there is any change, and what is the percentage change during the year. Even this needs to be given individual wise, and the total of all put together should match with the capital whatever you are reporting in your balance sheet as share capital. So this is one of the new requirements what the notes under general instruction for preparing of balance sheet, the notes needs to be given with this information. So this is a new thing what they have asked from 21-22 onwards. Then trade payable aging schedule. This is again a new thing. What 1 second, I think. Yeah, I think you can see this. Only if I put it into screensaver, you are not able to see. Trade payable aging schedule. This aging schedule used to be done earlier, but now they have prescribed the format what needs to be done. So in the particulars, if you see, they have put even the MSME also. So how much amount is payable to MSME, that you need to even now disclose less than 1 year, 1 to 2 years, 2 3 years, more than 3 years. Like that, you need to see how much money is outstanding in your trade payables, where you are supposed to pay your for all the raw materials or whatever the purchases you have done from them. By giving in the list MSME, others, disputed dues to MSME, disputed dues to others. So like this, you need to now give the reportings. Okay, this was not there earlier. They have given more importance to the MSMEs, because MSMEs are the sectors, as many of you know, that it is contributing towards 40% of the export, 70% to the job market, and it is almost contributing towards 32% of our GDP. So they have become one of the priority sector, and the protection and safeguarding the MSME has become one of the top priorities of the government today. So keeping that in mind, they are told that okay, every company which is having dealing with MSMEs, they need to disclose it. That means now the company needs to now see whether the business what they are doing with as a vendor, whether that vendor is an MSME or not. So that means they need to take the MSME registration certificate from them in order to consider them as MSME, and that needs to be disclosed now. So if they are not done, then it becomes the responsibility of the auditors to tell that particular company to do the reporting and share it before they sign the audit report for that particular year. So this is one more requirement which has popped up from 21-22 onwards. Then we need to have a trade receivable aging schedule. So we need to furnish this information also. So you can see their outstanding for following period from due of the payment, that is less than 6 months, 6 months to 1 year, 1 to 2, 2 to 3, and more than 3 years. On the other hand, we can see what are the undisputed trade receivables which can be considered as good if you are considering it as. Then you need to give the explanation also. So how you are able to consider it as a good? What makes you good? Have you taken up some what you call backup for those things, or is there any particular what do you call security or something which is backed up by that particular receivable, so that you are saying it as a good? So how do you say it as a good? So how do you again consider that as a good? That is again a question which needs to be answered based on the certainty of the receiving that amount back. So how do you, how much you are certain? What are the grounds under which you are saying that that will be a certain good debts which may not go as a bad? So even that needs to be understood and analyzed, and accordingly the provision needs to be created under the contingencies and provisions. So that's one more standard which is getting impacted because of these changes what the MCA has reported with. So undisputed trade receivable considered doubtful, disputed trade receivable considered good, disputed trade receivable considered doubtful. So what is the dispute? Disputed means whether there is some case pending, or whether you have gone to DRT or some body, or where have you filed any case against this person in any court of law or in any other judicial body where you are expecting the settlement to happen. So if it is undisputed, then both the parties have agreed for settling, or if there is any dispute in terms of accepting or accommodating that particular debt, that's a very important thing. So receivables, okay, whether it is a disputed one or undisputed one, whether it's a disputed good or undisputed good, whether it's a disputed doubtful or undisputed doubtful, that needs to be given now. So you need to drill down into each the receivable components which are outstanding for less than 6 months, so and more than 3 years. So you need to give it in an age bucket wise, and this is a new requirement what the MCA is initiating. So that means now you need to start capturing the information to the core. Okay, so your software or whatever the people who are working in the receivable department, right, they need to ensure that they make the track of all the receivables, and they do it based on this analysis: undisputed good, undisputed bad, doubtful, disputed good, disputed badful, and all disputed bad, and all those things. That is doubtful, sorry, not bad. So that needs to be done. Then title deeds of immovable property not held in the name of the company, even that needs to be disclosed now. So if you are taken any mortgages, or if you have taken any security, or if you are taking anything other than which is not in the name of the company, so even that needs to be disclosed now as part of the disclosure standards. So your property, plant and equipment, your inventory property, okay, like land and building, all these things needs to be disclosed. You can see the format there. So according to the format, you need to give importance, and you need to start disclosing those formats to the notes on accounts. So it should come in your notes on account, basically. So this is what I was telling you. They are fixing more responsibility of the director. So if you are, sorry. Type of borrowers, So borrowers can be, promoters can be a borrower, directors can be there, key manager persons can be there, related parties. So if you have any borrowers or loan if you have taken, or unsecured or secured loan, whichever you have taken from these people, right? So that, or advances if you have taken in the nature of loan outstanding. So how much is the outstanding during the end of the period, you need to say. And what is the percentage of that in the total loans and advances, that also you need to mention now. So many companies are playing around these figures. So any amount contributed in cash or any amount deposited into the bank account, if they are not able to explain, they are telling it is a director loan. It has come from the director, or it has come from the key managerial person or promoter or whatever they are telling. So, but that needs to be disclosed now, and not only just telling what is the outstanding amount, but you need to tell even what percentage of that loan is there in the total share of the loan itself. So whatever the total loans and advances you are showing in the balance sheet, what percentage of that belongs to these borrowers, which you have borrowed from these people. Even that also should be forming part of it. The other thing which requires disclosure under MCA norms is about capital WIP. So capital WIP is about the project in progress and project temporarily suspended. You need to show that. So if there is any WIP, you cannot keep on showing the WIP in the inventory. So when you are showing that inventory, what is the WIP, you need to clearly say if that project is continuing or project is suspended. If project is continuing, what is the amount of the WIP it is lying less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. If the project is suspended also, temporarily suspended also, you need to show the period bucket wise, less than 1 year, how much, and all those things. So this is to ensure that the whatever the stock you are showing, what are the inventory in which you are showing working progress. So whether that is because of an ongoing project or a suspended project. So many times even the suspended projects WIP is also shown, which unnecessarily inflates your profits and all in the books of accounts. So in order to be thorough with what is that which is going and sitting in WIP, whether it is on the ongoing projects or whether it's a suspended projects or whatever it is, because only the production things, whatever is happening with the related projects which is ongoing, only needs to be disclosed. So, but since they are even booking the other things, because they say that the project may be suspended temporarily for 5 to 6 months, but we continue to show in the books as a WIP, then you are inflating your stock unnecessarily there. So in order to make sure that your stock is showing the true picture here, we need to give this as a disclosure again in your books of accounts. Then intangible assets under development aging, even this also needs to be given project wise, whether the project is ongoing project or a suspended project. So even intangible assets which are used in that projects also needs to be given age wise, age bucket wise there. So aging is very important, and also the classification based on ongoing projects and projects which are getting suspended also needs to be disclosed. This is a very important thing which has come up, which is about Benami property held. So this never used to come, and now see, and most of the companies will not disclose all these things. This will be part of the audit findings. So at the time of audit, if you come across any Benami related data which is appearing in the books of accounts, then even that needs to be now shared. Example like details of such property, including the year of acquisition, amount thereof, who are the beneficiaries. If property is in the books, then reference to the item in the balance sheet if they have disclosed it. If property is not in the books, then the facts shall be stated with reasons. That's a very, see, now the role of auditor has become more and more, what do you call, it's like getting into the deep of the companies. So, so in finalization of accounts and finalization of audit cannot happen within 10 days or 15 days now for a big companies, because you need to look into all these transactions and you need to watch for and finally give a report saying that we have not noticed any Benami property held or something like that. You are answerable for if you are disclosing all these things. Again, the board of directors will be held responsible, because when you place this report with notes on accounts in the board meeting, they are the people who will be accepting that, yes, to our true and best knowledge, we have supplied all the information. That's what they disclose, and they sign the audit reports. So when they are doing it, that means anything which happens here, they will be held responsible. So directors cannot just wash away their hands saying that they are not aware of all these things. So auditors should bring to the notice that these are the things which are expected by the MCA, and they are supposed to disclose all these things. Nature of proceeding, status of same, and companies view on same. So any Benami related information is there, it becomes very important that you share that information in the notes of accounts. Then willful defaulters. So this willful defaulter is as per the RBI guidelines. So they have defined who is a willful defaulter. So even this also should form part of your notes now. So date of declaration as a willful defaulter and details of default. So amount and nature of defaults. Even this needs to be highlighted in your notes on accounts in the disclosure form, where you need to tell what is that, if any director is a defaulter. We are talking from the director here. So any director of that particular company is a willful defaulter. We need to bring that also into picture. So this is basically about the willful defaulter as per the RBI guidelines. Okay, they have given the guidelines on who will be a willful defaulter. According to that, we need to look into if the director is a willful defaulter with his personal capacity, or in the capacity of working with any other company's directorship, if he is working and if he has become a willful defaulter. Even those things also needs to be brought into the notice now. Then relationship with stuck companies, I told you, this is a very important thing. So a director can become director for as many companies as he wants. So in that, if he is also a director in some other company which has been stuck off, okay, then even that also will become part of it. Why here we are trying to bring it is, if a company is taken off due to a default in non-filing of returns or all those things, right? Even the directors will be served with notice. Okay, director will also be served with notice, and they may disqualify the directors also for 5 years. They cannot become director for next 5 years. So in such cases, because of his thing, the company's name, the company has removed that name or particular name where you have been a director. Even that also needs to be told here. Name of the company, stuck off company, name of transaction with stuck off company, that is investment in security, receivables, payables, balance outstanding, relationship with the stuck off company, if any, to be disclosed. So if nothing is there, you need to tell them nothing, no relationship with stuck off companies. You need to at least mention that. You cannot just ignore this. Okay, you cannot just ignore this. Then these are the ratios which they have told it should be disclosed. So they are told these are the ratios which are mandatory to be disclosed in your financial reporting. So I think these ratios, most of the ratios will be there. But if any company doesn't disclose it, they need to ensure that they disclose these many ratios. This has been made mandatory as per the notification issued on 24th March 2021 by the MCA. Then CSR, this is a very important report which the government has taken seriously now, because there are a lot of violations which are taking place. Especially companies are floating their own trust and transferring the money, and the money is getting used for some other purposes other than what the CSR activity they are supposed to do. So in order to track that, they have the MCA has asked to give information on their CSR activities, if they are coming under that, amount required to be spent by the company during the year, amount of expenditure incurred, shortfall at the end of the year, total of previous year shortfall, reason for short. See, these things, these are all the information which needs to be given now. So CSR is one thing which they are closely looking at. See, I was talking about this, right? Details of cryptocurrency transactions and virtual currency. So any digital currency or any form of cryptocurrency or crypto assets, actually, okay, they have told, given again some clarification. So cryptocurrency includes your crypto assets also. Okay, cryptocurrency is part of one of the crypto asset. So even that norms also needs to be disclosed. So this is for the companies. Okay, this is not for individuals. This is not for a director. This is for the company as such. Okay, cryptocurrency transaction and statement of equity changes. This is one of the important formats which they have prescribed for current reporting period and previous reporting period. So any changes in equity is there, that needs to be brought to the notice by filling the following format. Okay, what is the format, whatever is appearing on the screen, right? They need to fulfill that. So in nutshell, these are the significant changes which has taken place. So I wanted to share the balance sheet format also. Since it's already time, I'll not be able to share that balance sheet format, but I'll be just circulating that new balance sheet format which is there, which has been issued under Schedule 3 of the new company rules. So I'll share that, and that can be circulated with the participants who have participated in this particular session. So this is what I had to highlight you on the current and the forthcoming changes which are taking place in the reporting structure. So now I stop, and if you have any questions, you can ask me. Thank you.
Thank you, sir. Anusha ma'am?
Yes, sir.
I will take up the question answer session.
Okay, sir.
Thank you, ma'am. Sir, from a particular person. Hello, can you hear me, sir?
Yes, sir. Yes, sir. Yes, sir. I can hear you.
Sir, Maruti T, a person who has asked comprehensive income. He wants to know regarding that.
Oh, that is part of your income statement, right? The profit and loss account statement. Comprehensive income statement, right?
Yes.
That's
sir.
what you're asking?
Sir, he has asked, give me some input about comprehensive income. That is what his question says.
Okay. Yes, yesterday I think he was not there in the session, I think so, because yesterday when I was talking about the financial statement, I talked about the profit and loss account statement is broken up now into two formats. One is the general form of profit and loss statement, what you will be recording, and the comprehensive income statement, which you need to form that particular part of the profit and loss account. So comprehensive income statement are those things which will be really impacting your profits over a period of time, within which the standards needs to specifically talk about how to measure that. So there are a lot of things which comes into the P&L account, and which impacts your income generation over a period of time. So that particular things needs to be segregated separately, and it should be reported under comprehensive income details. So that is what comprehensive income statement is all about. It has become one of the mandatory norms now to report even the comprehensive incomes, whatever is there.
One more question from Mukund V. Koushik, sir.
Yeah.
Since you mentioned about automated accounting and robotic accounting, does that mean now everyone should become techno-functional rather than processing only accounting knowledge? What's your opinion? That's what he's asking, sir. It's there in the chat box, sir.
Okay. Yeah, I think, technology intervention is done keeping in mind that whatever the accounting system, what we are following now, definitely it will go for a change. So you need to be technology savvy person, even though you are from commerce background or from arts background or whatever it is. So what I strongly suggest is, now technology or learning software or becoming more digital is not only the scope of a science graduate. It is nothing, no more a science graduate hardcore cake. Technology belongs to everyone, whether you are from any commerce or accounting, taxation, or any background you are a person from. software, technology, digital, everything you should be knowing. So going forward, yes, today I think you might have seen in banks. Actually, banks once upon a time used to be a hub for all the commerce students. Once you complete your graduate in commerce, you used to go and join some banks or join some financial institutions. Today, those job has been taken by technology people like engineers or BCA people, MCA people. They are the people who are snatching away the banking jobs also. So now finance and technology are something which is getting integrated. So you see a lot of B people doing MBA in finance and they are snatching the finance job in a lot of companies like if you go and see companies like JP Morgan and all those things, right? So most of the financial jobs has been taken over by the engineers. Why? Because they are technology savvy people. They know the technology and that's how they are trying to take back the financial jobs also from us. So going forward, yes, your financial job or accounting job due to technology interference, it is going for a tremendous change. Only thing left to you is you also should become a technology savvy person and you also need to run with whatever the system expects. So you cannot say that I am from a commerce background, I will not learn technology or I will not understand how to do the AI environment, how to work in that, or robotic or automation environment, how to work and all those things. That will not happen in future. So if you want to survive, if you want to get a better job, if you want to progress, you need to be a technology savvy person, even though you come from accounting, arts background, whatever it is.
Thank you, sir. So that's all the questions we have in the chat box. If anyone has the question, you can ask, sir. Yes, sir. Sir, I hope you don't have any other questions from the delegates. Thank you so much, sir, for your time. Now I call upon Dr. M.S. Nagaraj, Coordinator, IQAC, Head Department of Commerce, to closing remarks. Over to you, sir.
Thank you, Anusha. I'm really happy for the successful completion of a 3-day national level webinar on IFRS and corporate reporting resources. My thanks and appreciation goes to CMA and Raveendranath Koushik sir. Thank you very much. You have been such an informative person. It's been 3 days. It's almost like a marathon. Your dispersion of the information, I think it's really been appreciated, and the appreciation is reflected through the chat box, the appreciation and the questions that is being raised by the delegates. Thank you very much, sir. And in SSMRV, we are pioneers in conducting such type of webinars. Essentially, this particular program we have initiated through our accounting club. In fact, we have 8 to 10 academic clubs through which all these academic activities do happen. And these previous 3 days program has been initiated through accounting club, which is being coordinated by Dr. Srihari, and the Unnathi, the SDP and FDP program, which is initiated and coordinated by Mrs. Anusha. In SSMRV College, these type of accounting club as well as the academic clubs will bring in lot of such things in the near future also. And we have lot of things that is being lined up in the pipeline, that November 2nd to 4th, we have a 3-day national level webinar on research guidelines and literature review, questionnaire designing and statistical tool. There has been a wonderful participation from all the delegates. You have been cooperating with us, been actively participating in all our initiatives that is being taken up by SSMRV College. I would also like to thank all our delegates who have been part of this 3-day program. And my request goes to all of you to show the same amount of cooperation for the future programs that is being lined up. And we would be sharing the brochures and all other related information through WhatsApp and other social media. Please do log into all our programs. As we all know that our principal, Dr. S. Anil Kumar, whose brainchild is about this academic clubs. So my best wishes goes to our principal, who has taken so much of what you can say that initiative in mobilizing all the faculty members and making it possible. So my heartfelt congratulations to the coordinators of these two clubs, that is Unnathi, Mrs. Anusha and Dr. Srihari of the accounting club, and their team members who saw that this particular program has been a very successful one. So thank you very much for all of you and for being a part of this. And I request all of you to be a part of our future endeavors. Thank you. Thank you very much. Over to you, Anusha.
Thank you, sir. I extend my gratitude to Honorable Resource Person, CMA Raveendranath Koushik, sir, to take out time from his busy schedule to grace the event. Thank you for sharing your knowledge with us, sir. It was pleasure listening to you. I hope each and every participant has gained knowledge from you, and we are getting a lot of appreciation in the chat box also. Thank you so much, sir, for your time. A special thanks to our principal, Dr. S. Anil Kumar, sir, for providing immense support to make the webinar successful. Thank you, sir, for your continuous encouragement. I extend my gratitude to Dr. M.S. Nagaraj, Head Department of Commerce, for extending endless support in organizing the 3 days webinar. Thank you so much, sir. I must thank my organizing team, Accounting Club and Unnathi Club, members, faculty members, Mr. Srihari, Dr. Srihari sir, Mr. Shivkumar sir, Mr. Gokul, Mrs. Vidya, Mrs. Vijayalakshmi, Ms. Apurva, and the technical team, Reddy sir and Raviraju sir. Thank you so much for the endless support that you have provided for the success of the webinar. Last but not the least, I must mention my deep sense of gratitude to all the delegates who have joined all the 3 days of the webinar. Thank you so much for your time, and we expect the same kind of cooperation in all other future endeavors. Thank you so much, everyone, for joining with us. Sarve Janaha Sukhino Bhavantu. Dhanyavad. The feedback link has been shared in the chat box. You can get the e-certificate by filling the feedback form. Thank you, Raveendranath sir.
Thank you, madam. Thank you for the opportunity. Thank you, Srihari sir, for inviting me for this
We have
session.
to thank you, sir. Thank you very much.
It's my pleasure, sir. So today morning I was in Christ University. 6 hours I was giving lecture on GST.
Yeah, sir. Actually, we know that. That's why.
Yeah, so I've become a little bit tired from morning. Okay, thank you. Thank you for the opportunity, sir.